Welcome to the channel. I'm James, and today we are looking at the Intel Corporation, ticker symbol INTC. There was an investor meeting yesterday where the CEO talked about the expected growth for Intel, and what we're going to be doing is putting in these updated numbers into our discounted free cash flow models to see what the value of the stock should be if Intel does what they say, basically. We're going to be quickly touching upon the financials. I did a video on this a couple of weeks ago, so I'm going to be just running through this quickly, but let's have a look at the stock price. Currently, it is down to $45.04 a share, down 5% on the day. The market reacted poorly to this announcement, as you can see. It's actually almost as low as it was at the bottom of the pandemic. It did hit lows of 43. But you can see this has been a pretty consistent line that Intel has got to around about that $43 mark since basically February of 18. Obviously, it can go a little bit lower to about $44 a share, but this has been a consistent bottom and a level of support for Intel for the last 2 years. So let's just go through the article, which was released yesterday morning, and this is: Intel sees no big profit margin gains before 2025 would mull over consortium for ARM. We'll talk about who ARM are in a second. Easy for me to say. Intel Corp expects its profit margins to drop this year, then be steady for several years as it invests in new technologies and factories to meet rising chip demand, but adds its forecast climbs from 2025. The CEO, Pat Gelsinger, said they'd be interested in participating if a consortium owns the British semiconductor and software design arm. The gross margins are set to drop to 52 from 58, and it saw levels of 51 and 53 in 2023-24 before climbing back in the following years. This is the lines that we really care about here. Intel predicts a revenue increase of $76 billion in 2022, mid to high single digits point of growth in 23-24, and then gains of 10 to 12% in 25-26. The next thing, basically, they're just saying that they have a $20 billion deal for a greenfield chip factory in Ohio, and they're also buying a Israeli chip maker called Tower Semiconductors for $5.4 billion. So this will take a hit to the free cash flows and things. So don't be too worried if the free cash flow is down, because they are investing this money wisely. And yes, on ARM said that there's been talk of the industry forming a consortium even before, yes, NVIDIA proposed to buy ARM back in the day, and this deal is valued up to $80 billion, but officially collapsed last week. So that is the note from the CEO. Let's just quickly go through the 2021 numbers. Also, just can you give a like on the video and subscribe if you're not already. I did do a video on this, so I'm just going to go through this quite quickly. Net revenue is up for the year. 77.6 billion to 79 billion. The net income was down slightly, 20.8 billion to 19.8, so that is down $1 billion. Reason for that, as you can see, is the operating expenses were up, R&D up 2 billion or almost 2 billion, and restructuring as well, new CEOs and things, I imagine, but 2.6 billion from 200 million. So this is probably not a consistent cost, so expect profit to be up in the next year. And then if we just go shares outstanding, you can see they are buying back their shares, 4.094 billion down to 4.069 billion. So that is nice. And finally, free cash flow. If we just scroll down a bit here, cash flow, free cash flow is cash from operating activities minus capital expenditures. You can see net cash from operating activities is down 35.3 billion to 29, and capex is up 14.2 to 18.7. So that gives us a free cash flow of around about 11 billion compared to the 21 billion that they previously had. So let's go to my sheet. This is the original numbers from Intel. You may have seen this before. This is just calculating based on their future free cash flows, analyst estimates on growth, and then net income margins. And what does this give us a value of for Intel? It would say about $54 a share based on their current estimates. This is with 2021 free cash flow. So what did Intel say they would do? Well, they were expecting revenue of 76 billion in 2021. So 76 billion is actually down from what, I don't know how that's an increase because they got 79 billion, but we'll just go with what he says. 76 billion. And then it was mid to high single digit increases. We had basically around about 81 billion, I would say, in this year. That's about a 6% increase. And then in 2020, oops, sorry, wrong click there. And then in 2023, 2024, another 8% increase, which would put us to around about, let's just say, 85 billion. And then a 10% increase, which would be about 92 billion. What does that give us as averages? Well, if we do about 7% a year, let me just undo what I just did there. If we did about 7% a year, and they're my estimates, so 7% a year would give us about $60 a share, which is a 33% discount. This is with these numbers, and if we were able to do that slightly higher, let's just change that to around about a 9% increase, which would take us to about $62 a share. So definitely higher than what we're estimating. This is with free cash flow steadily increasing, but you can see that the outlook for discounted free cash flow models on Intel is still pretty good. And if we look at the buffer Graham intrinsic value, this doesn't change based on those numbers. That has a fair value of around about $76 a share. So both are saying it's a buy if they can do these numbers. Really, the chip industry is growing massively. Intel may have a smaller piece of the pie, but it's still a very big pie for Intel to have. If we just quickly look at some technicals here, as I said before, this $44 mark is a consistent bottom. I mean, the last time it broke really below this was in June of 2019 and even in the pandemic. So let's just say, yeah, we're about $44 a share. I mean, this is a buying opportunity usually for Intel. Since the massive growth of 2017, it's been here for about 2 years. If we have a look at the moving averages right now, let's just get to the yearly chart. And moving averages, what do we like to see? Well, basically, is it above the major moving averages? And if not, then what is the reason for that? And is this a buy or a sell opportunity? So let's get the 50-day in first. You can see the stock has been in not necessarily a free fall, but down. Well, actually, I'll say it is 28% on the year. Wow, that is a massive 12.54%. Well, so if we zoom out here, you would have actually had a great selling opportunity here. Once the price broke below the 50-day, you would have sold at April 21, and you would have avoided all of this. So moving averages can be very useful. Obviously, hindsight is a bit more useful, but it just shows that there are opportunities to get out of these stocks when they are going down. And let's just have a look at the 100-day. 100-day, once again, there was a death cross here. That would have been another selling signal. And if we look at the 200-day, let's just get a 200-day in the red. I imagine it will probably be a bit more of a line, but yeah, you can see here. Well, this is, you don't want to see this. The 200-day is the highest, 100-day, 50-day, and then the price. But as I said before, this bottom is pretty consistent with Intel. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it. I'll be bringing out a Vanguard video tomorrow, most likely. I know people like that, and I've got a lot of new viewers, so hopefully they're interested in my Vanguard ISAs. And right, yeah, thanks for watching. Please give a like if you enjoyed it, and I'll catch you guys next time.